Number one, the first concept is that we pay more in taxes per year than we do for food, shelter, and healthcare. We all share the same common trait that we all pay, like taxes are all of our biggest expense per year. Income taxes, property taxes, Social Security, Medicare taxes, we pay state taxes. Taxes are our largest expense, and we want to be able to reduce that as much as possible. Number two, it is not about how much money you make, but it's how you make it. It's the vehicle, the shape of the form of how you make the money. And the IRS has done studies about this. They've done studies where you might have person A as a doctor or an attorney making $500,000 a year, and person B is a real estate investor making $500,000 a year, right? And they could have two drastically different tax situations, okay? And so it's not about how much money you make, but it's how you make it. It's the shape and form of income that you make that's really going to determine your tax bill. And the number one golden strategy when it comes to tax planning is how can we defer recognition of income as long as possible? So if we have an expense, if we have income, if we have a gain, if we sell something, how are we able to push that off as long as possible? Not recognize it in the current year. But if we have an expense, we want to be able to take that in the current year. How do we speed up those deductions? But how do we defer income as long as possible?